see that the maximum swing into the London Open was $1,400, a total on a two-lot basis of $1,800 profit on a two-lot. Now there is challenges to that trade, the volatility. There's challenges to that trade, volatility. There's challenges to that trade because of the margin that you're required to put up after the overnight session, because of the overnight session. So there are challenges to it, but my goodness, what a way to focus your attention into a 10 or 15 minute period to try and get onto some of the best trades of the day. And we've talked about this trade a lot, the MOC trades. We've talked about the closing bell trades, but the MOC obviously runs before the closing bell trades. And it's a nice time of the day to try and focus attentions, because if you don't have a lot of time and you want to still make a lot of money on trading, these are the times you want to be doing it. Margin's going to be increased for the overnight session, but obviously the outcome from that is that you're able to trade and you're able to go to bed. You're able to go to bed and then walk away from the desk if you need to. And the outcomes, as I said, $1,800 per contract. Unbelievable. So we've done a classroom this morning on bonds. We've done a classroom this morning on the MOC trade, and we've done a classroom this morning on the gold auction. So if you've missed any of those, no luck. We'll maybe do it again this afternoon, but we don't know. We never know. There might be some other stuff that shows up that we'll cover instead this afternoon, but at least we've done the classrooms. You've been able to pick up on the stories, and you've understood what we've been talking about. You've all been on board with these ideas, and that's a good sign. So welcome in, guys. Welcome in data-wise this afternoon. Yeah, we're obviously going to start seeing some US data coming in, and this afternoon is no different. We've obviously got OPEC, GMMC coming out today. This afternoon, of course, at 3 o'clock, we get the first of the US data this year. The ISM manufacturing PMI is expected to be 60, and the JOLTS job openings expected to be 11.06. Slightly higher on one, slightly lower than the other. So no discounting required for those numbers. On the basis that there's no discounting, the key aspect coming into 3 o'clock is dealer inventory positions. So coming into 3 o'clock, guys, start getting a read on the dealers. Start getting a read on the dealers on bonds, on gold, on the NASDAQ, on the S&P, whatever market you trade. Start trying to get a read. Start practicing these data releases. Start practicing, because it means you can start focusing on these outcomes. Now, they are fireworks, they are fast, they are furious, they are slippy at times. They can also be incredibly profitable if you get good at them. If you can start sensing what the dealer inventory position is to the most key events, it means you can start trading around the key events. You don't have to trade around them. You don't have to trade before them. You can actually do exactly the same just after these data releases as well. It allows you to focus your attentions. A lot of the things that retail traders are short of is time. One of the key ingredients is time. I don't have all day to sit at the screens. Okay, so you're going to have to try and focus your attentions at the key times of the day. And if obviously that doesn't suit perfectly with data releases, top of the hour, bottom of the hour obviously starts to become your focus of attention regardless of data. So that's what we start to really think about when we start seeing these opportunities. I'm going to grab a little bit of lunch. I will be back in just 10 or so minutes.